AT&T now admits it made a terrible mistake getting into the media business with Discovery deal and that its dividend will be cut. Today we are going to discuss the AT&T stock, ticker symbol T, whether it makes sense for you to continue holding or to consider buying this stock, how poor their financial situation is, and just how much the dividend will be cut. But remember, as always, this video is for entertainment only. Hi investing friends, this is Lynn and welcome back to 60 Perfect Ways to Wealth. And thank you so much for joining me here today. So let's go and review AT&T stock. First, a friendly reminder that if you enjoyed today's video, to please hit the thumbs up button and leave a comment below. AT&T said Monday, May 17th, it will spin off its media division, Warner Media, and merge it with Discovery. The move joins media brands including Warner Media's HBO and CNN with Discovery's HDTV, Animal Planet, Food Network, and TLC. For decades, AT&T has piled up terrible deals, while its core business simply hasn't grown much. Unfortunately, AT&T's core telephony operations have eroded and caused the company to pivot into increasingly risky maneuvers, including overseas expansion, the DirecTV deal, and now the plan to push into the streaming market. The result is that AT&T has amassed an astounding amount of debt, while earnings and cash flow haven't kept pace. This, combined with AT&T's previous commitment to a yearly increase in its dividend payout, led to big trouble. Over the past 20 years, AT&T simply hasn't been able to consistently grow earnings per share, see the Seeking Alpha chart's orange line, yet their yearly dividend, per the purple line, was always increased. This CNBC article shows Jim Cramer as claiming that AT&T's Warner Media spinoff plan ends one of the dumbest mergers in recent history. After calculating the expected dividend cut from AT&T's projected change, Cramer states that T's stock dividend will be cut in half. That's 50% down. Yesterday, Cramer slammed AT&T over the move to combine Warner Media and Discovery. The nearly 6.7% yield on AT&T signaled that something is wrong with the company, or the stock would be higher and the yield lower. Cramer claimed, "This is what happens when you run the most heavily indebted company in America. Apple, Alphabet, or Facebook would never do something as stupid. They're sitting on mountains of cash and it could afford mistakes." AT&T's current issues are a reminder that a high dividend yield alone is not a solid reason for owning a stock. Over time, a company needs to have developed a stable business that is growing to support its generous payout like AT&T. If a company doesn't have core operational strength, the dividend will give way sooner or later. One more note on AT&T's poor financial performance of late. This financial fundamental slide from E-Trade indicates that T's stock earnings per share growth rate are less than 83% of its peers in the wireless telecommunications services industry. Once the dividend cut takes place, it appears that Verizon, ticker symbol VZ, will yield more than AT&T. I did create a video analyzing the Verizon stock earlier this month and will provide a link to it at the end of this video. I also was so impressed with their prospects that I bought shares of Verizon on May 4th. In the near term, we will expect AT&T shares to drop. They did dip to under $30 on May 18th per this Yahoo Finance screenshot. You will also note the not applicable PE ratio, as AT&T has been losing money without the support of income investors. I expect that the stock will lose a good amount of its shareholder base. It's rare that a management team acknowledges so clearly that they made a terrible mistake getting into the media business with the Discovery deal and that they're willing to undo it. AT&T originally spent $175 billion for these assets, and then 3 years later they are unwinding these positions for approximately $80 billion. The new entity will own the deepest libraries in the world with nearly 200,000 hours of original programming. The deal appeared at first glance to be a win-win situation for all the parties involved. AT&T received $43 billion in cash, debt securities, and debt retention. Also, T shareholders will end up owning 71% of the new entity, while Discovery shareholders own the rest. Let me know if you own AT&T stock and what your thoughts are about it. Also, if you found value, please give this video a thumbs up and subscribe for more videos like this one. Now to view a detailed video that I made analyzing the Verizon stock earlier this month, click the link showing here.